Uber is down over 50% from this time 1 year ago during a time period where you'd expect to see a rise in the stock due to, things like reopening across the globe and such. The stock was at highs of $60 and is now down to $26 at the time of this recording, which paints a bad picture for shareholders and potential investors. But on this channel, we look for value investments, so let's try to analyze the business overall to determine where Uber might go from here, if it's approaching a margin of safety, or if we should completely disregard this business. Well, make sure to keep watching to find out, as we'll be talking about that and more on today's episode. How's it going? Welcome to Everything Investing. I hope you're having a great day. But with that being said, we're going to take a look at Uber's Q1 2022 earnings results, where we'll do a deep analysis into the financials of the business. We'll then take a look also at the stock chart to see what technical setups are currently setting up. And as you can see, we are down 56% currently from this time a year ago. And then finally, we'll conclude with the valuation of this business to see where exactly we should be potentially thinking of picking up shares of Uber, depending on what we see in their earnings results here, which is really going to give us an indication here as to whether or not this is something we as retail investors should add to our portfolios or not. And if you enjoy the analysis and the investing perspective, please like and consider subscribing for more of this content. Okay, so jumping into our technical analysis first here, we can see, as I stated just earlier, we are down 56% so far for Uber since the past year or so. And if I add in the drawings here that I've added onto this chart, we can see, yeah, we actually do have quite a decline right into our key buy zone down here. It's not necessarily a buy zone. This is just the point at which Uber has definitely rebounded since in the past. And once we got down to these levels down here, we actually pushed all the way up to all-time highs, right up near $60 per share. So now once we've reached this level, we're once again back down to these 26 levels, $20 range, price range, and this is where we have all-time lows. So we're kind of stuck in a range with Uber is what we can see since its IPO. We're just kind of going in a channel from the all-time lows to the all-time highs. Now we're back down to pretty much all-time lows. So where are we going to go from here? Are we going to go back up to all-time highs? That's what some people, especially some retail investors, might imagine with the considerations to the reopenings globally, like we mentioned earlier. But that remains to be seen so far with their earnings analysis, which we'll get into in just a second. But if we are going to see a rebound in the stock price from these levels, watch for these blue lines here, these horizontal lines, to hold up as resistance. As we've seen in the past, they've held up as support, but then once we're below them, they're going to hold up as resistance, right? So watch for a price to potentially get rejected at these zones. These can also be your potential targets if you are a trader. And if you're an investor, now might be the best time to purchase shares. But of course, you don't just purchase based on the technical setup. You also have to fall in love with the business from a fundamental perspective as well. So let's jump into the earnings highlights and see what Uber did for this Q1 of 2022. All right, so let's jump into Uber's Q1 2022 earnings highlights here, and we'll start with the revenue as always. This is actually came in at $6.9 billion. Is actually up over 130% year over year. That's actually massive. And this is actually what we were alluding to earlier. As people return to their offices, restaurants, stadiums, etc., airports around the world, people have also returned to Uber. And so you can see the direct result of that right here, as they've come in with 137% increase year over year in their revenue, which was a beat by 800 million from analyst expectations, right? So that's what you can expect. Now, this is where things get hairy, is because when we look at their earnings per share, they actually came in at negative $3.04, which was a big miss, which is why I put this in bold. A big miss from their analyst expectations of about 11 cents that they were going to come in just shy of profitability, right? So that has to leave you scratching your head as to what is going on here. If we're coming in with 137, basically 138% increase year over year in revenue in top line, how are we missing so badly on the bottom line? Guys, we'll get into that in just a second. Let me finish going through the highlights here in the outlook, and we'll run through the numbers and we'll see exactly what happened there. But just to give you a little insight, I mentioned it in the highlights section here. They said their net loss, the reason why this number is so large, it was due to some headwinds that they had, pre-tax headwinds. And to explain further, what I really mean by this is that they actually had unrealized losses relating to their evaluations of some of their equity investments. This was the reason for such a drastic change here. But like I said, we'll get into the details in just a second. On a positive note, their gross bookings came in at $26 billion. This is up 35% year over year. So that's also something I want to mention. And they did give an outlook for Q2. They expect gross bookings to come in just higher, just underneath $30 billion, and their adjusted EBITDA will be around 250, let's say, $1 million. But with that being said, let's just jump right into the financials where we can actually see what really went wrong here in this Q1. So starting with revenues, we actually see they came in at about 3 billion last year during Q1, and now we're up to almost 7 billion, right? So we can see really the benefits of the reopenings and more people getting out of their homes. It's really paid dividends for Uber's revenues. And now we got to look at the costs here. So as expected, revenues have grown, and so costs have grown as well, right? And we can see this relatively across the board: marketing, other expenses. So we can see this number jumped up from 4.4 billion to 7.3 billion, right? And so that leads to our loss from operations. Last year, 1 year ago, 1.5 billion. Now it's actually it's a little better. It's at $482 million now. So we're underneath $1 billion. That's a check. So far, Uber is progressing towards that profitability. But yeah, let's see how this turned out. All right, next on our list here is our other income or expense. So last year was income. This year it's an expense of about $5.5 billion, right? And then we have to deduct the income or the loss before income taxes here of 6 billion. This was a negligible figure a year ago, but now it's a $6 billion loss, which we just talked about with their equity investments. And this ultimately leads to their $6 billion loss from operations, essentially. So yeah, not looking good for Uber so far, but really it is tainted due to their equity investments here that they've really shit the bed on, let's just say. So yeah, let's jump into the balance sheet now. It looks like we have cash and cash equivalents, which are relatively flat year over year. Not much else to report on. Everything's looking relatively flat. Nothing really changed in terms of their total current assets. Investments, this is what took the hit here, and we see that here, right? The $6 billion that has been lessened here in terms of their assets. Now, as always, when we look at the balance sheet, we really want to just take a look at the debt figure. Is the debt serviceable? Because if not, yeah, it's, for me at least, it's definitely not something I want to invest in. Businesses with a lot of debt. So if we scroll down here to the liability section, we can see total current liabilities come in at 9 billion last year, 8.6. So they're down just slightly with their short-term liabilities. And now we get down to here, we see their long-term debt, which is around 9, is relatively flat again, 9.2 billion. So if we compare that 9.2 billion with the cash figure that they have of 4 billion, yeah, I'm not really liking that too much. And the total current assets of just less than 9 billion as well. It's not like their debt is out of reach by any means, but yeah, it's definitely not something I like to see when a business does have more debt than they do have cash, first of all, and total current assets. Now they do have, that being said, they do have 32 billion in assets overall. So while they should have no problems dealing with the debt, considering they have about $33 billion in total assets, I think that this debt figure is just something that's noteworthy. So with that being said, let's move on to the statement of cash flows down here. And with regards to the statement of cash flows, we pulled down our negative figures once again. This year, again, down $6 billion due to the equity investments, so it's not looking too good. So when we try to figure out what the free cash flow is that Uber is producing, it's really going to be tough for us, since that negative figure here is really impacting their ability to profitably produce cash flows. So yeah, when we add back in depreciation, stock-based compensation, of course diluting you in the end, they add back this equity investment that they made bad on, and they come out with about $15 million in operating cash flow. And to be fair to Uber here, yeah, this is an unrealized loss. We have to remember that. So the impact that it has on the net loss is really just for accounting purposes. It is unrealized, and it could be in the profit next year. So yeah, we're at 15 million in operating cash flows right here. What are you going to really do with the 15 million? Not much. And as you can see, there's not too much to write home about here. So before we jump into our calculator here, let's look at their past earnings figures to see how we can evaluate this business intelligently. And yeah, we don't have a lot to work with, just like our last video there with Shopify. Yeah, they really just have a bunch of negative earnings results here. So it's going to be a little tough for us. But if we use this, I guess, $1 billion figure here, let's say that they can get back to 2018 levels, pre-pandemic levels. Let's see what we can put in here for Uber's calculation. So we go back here and let's put in, let's say they can reach 1 billion for the end of 2022 based on the positives that people are returning to offices, restaurants, etc. using the app. Okay, $1 billion in earnings with a 10% required return. They don't pay dividends, and I don't anticipate them to pay dividends for the rest of the year. If they are growing at, let's say, 15%, and then let's say 10% for the following 5 years on a 20 PE, they could be valued at around $25 billion. Now, if we compare that to their current market cap, guys, we'll just scroll down here, we can see they're actually at $50 billion. So what does that mean? What is that immediately telling me? That's telling me that the growth is already priced in with Uber. There's a lot of hype around it being the replacement of taxi services. We also have Uber Eats, which was holding up the business during the lockdowns and such. So yeah, there's a lot of things that are built into this, but it depends. It really depends on what we can reach here with our growth metrics. If they can grow, I mean, they are growing revenues at over 100%. So I mean, for the first 5 years, if they can continue that and grow at, let's say, I'm trying to be conservative here, but if they can grow at 30% for the next 5 years, and then if that drops down to I don't know. I don't want to see, let's say 15% for the next 5 years after that. On 25 PU, yeah, we can see this up to $70 billion in terms of their market cap. So yeah, there is an upside to this business, but again, there is also definitely a downside to this business. Let's say they can't meet their growth expectations here. Yeah, it would be really bad for Uber, and we're already down over 50% currently. And if we look at the chart here, yeah, it's we're kind of in an interesting spot here for Uber. So we might potentially go higher from these levels here. We might just stall out here. It's hard to say because they really need to turn things around there. They need to hit growth metrics while also hitting profitability. So yeah, that's kind of the analysis for Uber with that. Would I be a buyer at this current point? No, they need to turn things around for me, and then I'd be interested in picking up shares. But that's the analysis for this video. If you made it this far into the video, thank you for watching, and until next time.